The stocks of equity market intermediaries like depositories, exchanges, and registrar and transfer agents or RTAs have seen bumper gains this year. This was led by a swift market rally that led to strong trading volumes. Shares of BSE, CDSL, CAMS, and K FinTech have rallied 24% to as much as 283% so far in 2023. The Nifty benchmark, in comparison, is up 9%. This sharp rally, analysts believe, makes the stocks ripe for profit booking in the medium term. So, they suggest booking partial profits at current levels and buying once there is weakness.
The valuation post the recent rally in these stocks have become a little expensive. Therefore, there is very limited upside from here and little left on the table for the investors. So, in the short term, the bullish trend might continue, but over the medium term, the stocks might consolidate or we might see some sort of profit booking. So, we recommend investors to partially book out profits or and re-enter later at the lower levels or witness a little time correction.
Regulatory issues amid lofty valuations of these stocks are some other risks which merit caution, experts say.
We have a short-term bear market of 2-3 quarters, then the share price may also correct. There are regulatory changes, consistent pressure on the yields. Some AMCs have lower bargaining power. There is a heavy dependence on the mutual fund revenues for RTAs. So the EBITDA margins may also remain range bound for the short term. If there are any changes in the TER expense ratios by SEBI.
Gupta still likes the tech-oriented nature of these businesses, which requires less capital and allows cashback for investors. RTAs like CAMS and K FinTech, meanwhile, earn revenues through fee charged on mutual funds AUMs, while Asia's oldest stock exchange, BSE, and the country's largest depository, CDSL, earn from charges levied on all trades. The long-term prospects are strong for these companies given the low capital market penetration and a booming economy, experts note.
The markets are in uptrend, so these intermediate stocks which are linked to the capital market, they tend to benefit as the higher volume growth tends to directly flow to the earnings growth. The overall buoyancy in the capital market for the next 5 to 10 years, the markets are expected to do really well with the economy booming.
The rising investor participation in India is reflected in the threefold increase in Demat accounts after the COVID pandemic. Active clients on the NSE too have risen from 11 million in FY20 to 33.4 million as of September end this year. Thus, the stocks might consolidate in the medium term, but analysts suggest using the dips to buy them from a long-term perspective. Today, on 24 November, the last street will take cues from global equities.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.